Welcome to the 2025 Economic Depression and Preparation channel. Thank you for joining me. Please hit the subscribe button and the like button on the way in as we celebrate America's over 250 years of America here on July 4th, 2025 edition here. This will be a brief edition, holiday edition, but we're going to be talking about the jobs report that continues to come in here for the month of June. It was stronger than expected as we added 147,000 jobs in the month of June. Well, this is down from the 180,000 jobs we have been averaging over the last 4 to 5 months. So we are adding jobs, but we're not adding jobs at a faster pace, nor are we exceeding the amount of jobs that many of the senior economists had expected. But the unemployment rate fell from 4.2% to 4.1%, according to the official numbers. So we're ending the month of June on some good notes on this July the 4th here, according to reports. CNN Business continues this and emphasize that the U.S. job market continues to chug along despite heightened uncertainty about the economy and how President Donald Trump's tariffs could shake out. That remains to be seen, along with the effects of the passage of the big, beautiful bill. That remains to be seen. But last month's gains, which landed above expectations, like I said, they were only expecting 117,500 jobs to be added. It did mark a slight increase from May's total. So that is some good news for this U.S. economy. Now, less encouraging details remain. As you know, there's some hiccups here with this economy. Obviously, there's a lot of people working more than one job. A lot of college graduates are struggling to find jobs as they have graduated last month in the month of May, 2 months ago. And also, the pay is stagnating for people who are working. The pay is stagnating. The increases are not as high in terms of salary increases, and a lot of things are going away in terms of benefits that could be impacting everyone in the workforce, regardless of whether you're self-employed or employed or a student. So we'll have to wait and see how that plays out. But you can see the unemployment rate here decreased by 1 percentage point, or 1/2 percentage point. It was 4.2, now it's down to 4.1%. So we'll have to wait and see what happens there. Gas prices for July the 4th, according to Yahoo Finance, hit the lowest level since 2021. It's now around $3.17 a gallon for Tuesday's average, and so it's going down. There's some good news here for this economy. As many people are supposed to hit the roads and on the airways, gas prices are down, and so the amount of people that's traveling 50 miles or more from their home destination has increased this year as people decide to get out and enjoy the summer here, as it's generally good weather for the most part, and people are enjoying it. So the national average price for a gallon of regular gasoline stood at $3.15 per gallon, according to AAA data. 36-cent drop compared to the same day last year. So cheaper gas is a welcome relief for the more than 61 million people expect to hit the road this weekend. Now, this is not every year. The media touts as being a record year. I don't know if this is a record year of spending. It's probably not, but at least people can get together, old and young, and spend time with their family and friends on this holiday weekend. So that's a plus. See, crude oil sitting at $66.50 per gallon in U.S. dollars as it's traded as we currently stand today. So that means that with MarketWatch, the odds of a September Fed rate cut look high after June jobs report, but it may be a tough call for Fed Chair Powell here. As you know, Fed Chair Jerome Powell, this may be his last term here as Federal Reserve Chairman, and he may want to go out looking pretty good here. So the odds of a September rate cut does look higher, according to MarketWatch.com. Now, how much of a rate cut, that remains to be seen. I'm looking for just a regular 25 basis point rate cut, which in this economy is not going to do much, but something is better than nothing, according to most people. But will that impact mortgage rates is a tough call. Mortgage rates still are going to remain high, I predict, in my opinion, throughout this year and also 2026. The mortgage rates are not coming down below 4% again, like we've seen during the pre-pandemic days. So just something to keep in mind. And also on CNBC.com, divergence between the official and ADP jobs report reveals two labor markets. As I said, the U.S. economy added more jobs in June. We had record S&P 500 and NASDAQ composite records. But with the passage of the big beautiful bill and also other things, you see that companies are not looking forward to hiring more people, because that means that they provide more benefits and provide higher than the minimum wage salary in the majority of these cities and towns. And so that's just not going to be a good news for the economy right now. The good news is we're still adding jobs in the U.S. economy. The bad news is that we just don't have enough high-paying jobs outside of the trades and the manufacturing and healthcare and government, we just don't have enough high-paying jobs to sustain this rally, this growth rally that this economy is begging to go on right now. And so this is going to be very interesting to see as we head deeper into the third quarter of this year, 2025, and we'll see. So, like I said, I predict that the Federal Reserve Bank will do a rate cut this year, but it'll be later on in October maybe, and it'll only be 25 basis points, which will not be enough to sustain a rally on Wall Street or Main Street here. And we'll just have to wait and see how that plays out later on. In any event, enjoy the rest of your holiday weekend. If you're wherever you are, near or far, or if you're overseas, enjoy that too as well. God bless, and I'll talk to you soon on the next episode. Be sure to tell your friends and get to share the video. Subscribe, please. Appreciate your support. Any comments, anything you do, I do read the comments. I do support all comments that are positive in nature and constructive. Thank you very much. Talk to you very soon. God bless.